welcome back, ladies and gentlemen, boys and girls, to another Forex Market Preview. My name's Jason Stapleton, and this is the first time you're joining me. Thank you so much. I really appreciate that. And if you are one of the more than 50,000 returning traders who watches this video every single week, I really appreciate that, and I hope that I can provide some value for you this week. Before we get started, one quick note. Had a great week last week with the International Trader Workshop, and now that that's complete, those of you who attended that, if you were waiting until the last minute to go ahead and sign up for the Ratio Master Series, that time has now come because you have only about 24 hours left before that will be over. That ends on noon tomorrow, so make sure that you go ahead and sign up for that if you haven't done so already. Now, we've been looking at this, looking at the charts across the market today, or across the market right now. There are, and I'm going to be using the TD Ameritrade Thinkorswim platform again today. I've put a little bit of money into this thing. I'm gonna do just some test trades to see if we can to see how it performs and how it links with NinjaTrader. I do use some of the indicators that we offer to you guys. I use them personally, and so I'm going to be seeing how well that actually transfers over and how the executions look and all that stuff. But I'm very excited about this platform because it does pretty much everything I want it to, plus some other cool stuff. So basically, you guys know me as advanced pattern recognition. And basically a structured trader. That is what I do. That's kind of my thing. So if a guy's trying to learn how to trade and he doesn't want to spend a whole bunch of money on indicators and he's tired of buying systems that don't work, well, what I try and do is analyze the market based on structure and give you guys some good ideas and some good opportunities for entries and exits. Now, excuse me, I'm stuffed up, man. Every time the weather changes, it gets me. But what I wanted to talk to you about today is mainly what I do and what you guys, a lot of people know me for, is advanced pattern recognition, Gartley patterns, butterflies, crabs, ciphers, that type of stuff. Because of what the market has done here recently, there's very little in the way of advanced pattern recognition that you can drive off of. For example, you can look down here. Let's just start on euro dollar. Euro dollar's been, basically straight north. As soon as we broke, the last resistance level we looked at was 2,700, okay? And I said, that's the next major resistance level. That's the level we'll look at for potential counter trend trades to get back with the underlying trend. As we approached that area, market was already going overbought. Hang on a minute, let me shut this down so you guys don't have to see my alerts that come up. All right. But what I was saying was, and market just blew right through that. We were coming into overbought conditions. Market comes into the 127 and just skyrockets right through it. Didn't even look back because we talked about potentially a retrace back down into 127s for continued follow-on trade for a trend continuation. Didn't even get that. So now we're in this kind of limbo area on the euro dollar where there are only really two trades that I see. One is up here at around 133s. If I consolidate the chart up, and it's not quite that high. You're basically right in here. That's probably right where it is. About 133. I mean, there's no way around it. Right about 133 is going to be the next resistance level. And as you can see, it happened right here. And it also happened right here. And you can see the market respecting that support structure here back in, when was that? March of this year. So, March of this year, we broke down. We hit the retracement, and we've never really looked back until this recent break of structure right here at 127. When we broke 127, that puts us back into basically bullish momentum. And so now, for trend continuation traders, what we're basically looking for, again, is a press back down into 127s because there's no place else for the market to go here. I mean, we're right in the middle. We're sitting there. There was an inside support level here at around 130s that we talked about in a couple of previous Forex market previews. Market didn't even watch that either. We went right through it. So the market not signaling anything here that would indicate a reversal. So what we really need to do is find a place to get on the trend continuation. You have to be thinking that way at this point. Well, the next spot is 127. The only other option we have is that this market will go ahead and rally again up into 133s and then give us some sort of signal that it's going to reverse. Now, what is that signal? We always talk about the signal. A lot of folks don't really know what I mean by when I say the signal. The signal can be any number of things. It could be the market going overbought. It could be a double top, bearish divergence. It could be a reversal candle if you're a candlestick trader. There are a lot of different ways that you could look at the support resistance levels and ID. Okay, yes, now I recognize this as a potential reversal area that could present me with a high probability trading opportunity. But for right now on the euro, there just is nothing. If we come over to the pound, the story changes just a little bit. This is actually a pretty nice short just from the candle that happened on, we're on the daily chart here, pound dollar, the Friday candle here. And you can see, if I go ahead and fatten this up a little bit. Oh, hang on here. There we go. Stretch it out, scoot it over. We're coming right up into the resistance level, 162.70s. Market came in there initially. We pulled back, market rallied again, tried to get up, couldn't do it. All right? You've got very nice risk reward here because your stops can go right above 63.09. Okay? If we get above 63.09, well, that's going to mean that, hey, whatever happened on Friday was a fluke and the market's going higher. But there is an opportunity here for a potential pullback. Now, where could we potentially go? To do that, I like to pull in my Fibonacci retracements here. We'll draw swing low to swing high. Right there, and as you can see, 382 at around 159, basically 160s. 160s level is a level that we've been watching for a long time. If that level sounds familiar to you, it's because we've watched it before as a critical resistance or as a critical resistance level back up in here. So as we come back down into 160s, look left. You've got a structure resistance level here, and then one just a little lower than that at around 159.60s. So with all of that, what we're going to look for is a potential pullback all the way down into 160s. Okay? That gives you, as you guys can tell, if you're looking at risk reward on that, if I just bring in a nice little line tool here and I say, well, I'm going to short the open, this is assuming no gaps, but this is going to be your risk or your reward. And your risk is going to be somewhere like that. So you're getting about a 2-to-1 risk reward on your money here on pound dollar, just off of this this reversal candle. Now I bet if I drop down to a 4-hour chart here, that we're going to see, yep, a little double top. Okay, now this is technically not a double top the way I classify it because the market did break above and close above the previous high, but it immediately rolled back off of that to close below. So a lot of heavy selling pressure into the end of the day on Friday. Now, side note, anytime we see, never mind, just ignore that part. Market rallies up and then immediately gets pressed back down. So maybe it was profit takers at the end of the day. Who knows what it was? But most important thing here is we saw the market give back the vast majority of its gains for that day, for the New York session in the last half of the day, basically. So moving right along. I'm talking fast, guys. I'm trying to get through this. New Zealand dollar. Really nice double top opportunity here. Look, market coming in, initial high, we pull back, retesting the high. Look left, okay? Let's go over here. You can see market coming right into that previous resistance level, okay? So we got a previous resistance, it's a previous support level here, previous resistance level here, and now market coming right up into that zone again to retest. So opportunity here for a shorting opportunity. Stops again will have to go above the double top high, and we could see a move all the way back down into 80s, 80-30. Okay, so there could be a nice little 200-point correction here on the daily chart, New Zealand dollar. All right, Euro yen. Let's take a look at Euro yen. Previous structure resistance was violated at 101s. Market pressed all the way up to a high of around 103, 104, 103.90s, and then has retraced all the way back down into previous structure support. So let's drop it down to a 4-hour chart. Let's see what we can see. All right, market could potentially double bottom here. If we do, look at the bottom of your screen. Market extremely oversold. If we come back down in and double and retest, we're going to have a nice bullish divergence on this trade right at previous structure. So if those of you who are counting this thing up in terms of what we've got lining up, we've got break of structure, press back down into previous structure support, double bottom bullish divergence. Those of you who attended the Ratio Master Series course, trend continuation trade, setting up right here on the euro yen. But you didn't realize how valuable this little free thing was once you've got a little bit of knowledge behind you. But very going to be a fairly low risk, long opportunity here, especially if we do double bottom. All right, taking a look at pound yen. Again, we're looking at a press needing to come back down into 125s before we find anything of any real value here. If I consolidate up the chart, the next resistance level is going to be all the way up here at 131. So we're kind of in a limbo space here. Let me look at something here. Fibonacci retracement. Swing high to low. All right. We are going to have, by looking at this, a potential bat pattern setting up as well. Let me go ahead and bring in the, hang on here, the 886, which for some reason is not in here. Hang on. All right. Well, this is the problem with using a new deal here, is that I can't, for some reason I don't really know what the problem is. Anyway, the 886 is going to come in somewhere in here. Let me just draw a line in. I'm gonna guesstimate it. Whoops. Somewhere around right here. Okay. 886 will come in. Now, if we come up into the 886, we are seeing some structure around that area, so you could be looking for a potential sell around 130.50s on a bat on a bat pattern. Okay, and that bat pattern looks like this. If I go ahead and draw it in for you, X to A to B, B to C, C to D, up into that 886 retracement right there. So if we do see that press up, that's going to be a nice selling area. Problem is, again, we're right in the middle. So when we take a look at, I said at the beginning of the trading video this week, with the market doing what it's doing, it provides us very little advanced pattern formations to go off of. And basically on a lot of the charts, like Euro, like what are we looking at here? Like pound yen, like, New Zealand's got a double top. But again, here, if we pull up Aussie, you'll see it again. Aussie put in a double top right there. Boom. We ran right into 102s, as I talked about a couple of weeks ago before rallying out, right back up into resistance. Very nice pen bar reversal signal there at the double top, signaling the reversal, and the market has come back off. The problem is, well, now we're between 104.55s and 105.80s, or on the low side, 102s. So you take a look at that, and you just say, well, where's the trade? Well, at this point, the way I trade is there's no trade. So if you trade euro dollar and you're asking me, well, should I be long or should I be short? I'm going to tell you, I don't know. I don't have a trade. I don't know what the market's going to do. Now, if it comes up here, if euro dollar comes up here to 133s, I can tell you what I'll look for. If it comes down here into 127s, I can tell you what I'll look for. That there are potential trades at both of those areas, but right now the market is boxed in and it's not giving me any opportunity. However, New Zealand is giving me an opportunity. It's giving me a double top short that I can take, and also if I bump over to pound dollar also giving me on the daily chart, if you can trade a daily chart, a very nice potential reversal as well. Market significantly overbought as it started its pullback around 95. It doesn't get that overbought very often. So a note to you, if you are, as you're going out there and trading, maybe just a kind of a training point to you, is that there's not always a trade. Okay, the sense that you always have to be in the market, or that you always need to know that if you're a professional, you should always know. Well, that's a pundit will always know, or he'll always talk like he knows. Okay, but traders don't always know where the market's going to go. They have an idea. They say, well, it looks like we may go higher. It looks like we may go lower, but we don't know. Okay, we're making calculated guesses. We're making probability assumptions about what the market will do. Probability is a very important word in the trading business, okay? Because everything that we do is built around probability. What is the likelihood that this is going to happen over that? And once you can determine the probabilities, both of, I've always said you need to know three things, okay? You need to know, you need to be in the right market, you need to choose the right direction at the right time. And if you can do all three of those things, you're in pretty good shape. But when it comes to probability, you've got to know two things. Number one, what is the probability that is the market more likely to go up or down from here? And what are you using to determine that? Okay? Is the market more likely to go up or down from here? And then second, the second most important thing that you've got to know is what is my risk reward? How much am I risking versus how much do I stand to get back? When you know those two things, now you can put yourself into higher probability trades that are going to give you a better risk reward and ultimately more money. That is how you create an edge. It's not some kind of secret thing that people, somebody's holding close to the chest somewhere. An edge is nothing more than a statistical advantage. That if I do these same five things over and over and over again, every time I see the trade set up and I do them consistently, that they will generate me X amount of return. That's it. And I can make an assumption on that based on the historical testing that I've done. So, anyway, I'll get off my soapbox. Thank you guys so much for watching the video this week. Again, I apologize for all the congestion I've got. And I will be back here next week to talk to you guys some more. If you haven't signed up for the International Trader or for the Ratio Master Series course, again, I'll be sending you out a 2-hour warning tomorrow, but that'll be it. We've already had the response, again, overwhelming, better than I deserve. I feel like every time we do one of these, the response that we get is just phenomenal. This time has been no different. So it was my great pleasure to work with you guys over the course of that week. My hope is that you got some real value out of it, and for the rest of you who I'll be seeing in about a week from now, just be reviewing the training lessons and doing all the things that I know you'll be doing as professionals. So until next time, good luck and good trading. I'll talk to you soon.